Yo, what's good, gang? What's going on? Let me kill this music. What's going on, guys? How we doing this evening? Yo, what's happening? Yo, mad love from Germany, Sydney, what's good? Sack Trades, what's happening, player? How you doing, man? Who we got in the room? Nice. Members, Gregs, what's happening? All the Gregs. Marcel, what's good, bro? Demi, Paul, Mark, how you doing, Mark? Frogs B, what's good? Thank you very much, Y-Bean. Nice one, bro. Love from India. Thank you, bro. Dullboy Gaming, what's happening? Wicked. What's good, man? What's good? How is everybody, man? Love from Pakistan. Love from Cali. Vincent, what's good? What's happening? Ahmed, what's good? Dutch, what's good, Dutch? What's happening? What's going on, ladies and gentlemen? Yes, we shall have a conversation. It's going to be a nice short conversation. You know what the Sunday nights are like. We just got to highlight the key levels, but we're going to have a little bit of a conversation trying to understand and make sense of what's going on. Now, I'm at my mother's. I still haven't sorted out her internet. So, no one in the house is using internet except me. I have to put in that demand, man. It's so bad. I can't be doing that. All right. So let me get straight to it, ladies and gentlemen. If you are new and you're passing through to the channel, my name is Tino. Welcome to the Traders Reality Show. Let's have a conversation, guys. Okay, then. So, are we good, everyone? Yeah? Looks like everyone is just saying what's up to everybody. I like how every time I come into the stream, you guys are all addressing each other. I love that. I actually love that. All right, TBJ, hold on. Tino, if market makers exist, why didn't my limit order at 42,600 get filled during the last dip at 41,500? Slippage, my friend. Slippage is a tricky thing. They say slippage is when there is a little bit of a delay. The best way to explain it to you is there's like a little bit of a delay, or there's like a backlog of orders that haven't been filled. All right. Which frankly is, to the common person, you can only justify it as the broker saying to you, we couldn't get your order filled, or there was a mishap in the actual system. They make it out to be a problem in the system when it's not. All right. Because maybe at that price that you had, there wasn't enough liquidity for them, or there was enough liquidity, which would explain why they would send it or not send it. Okay. So slippage is just when it's the broker's legitimate way to play around with the spreads of price. Okay. Massive in MT4. Now, a lot of MT4 providers, they talk about, no slippage and what have you. But there is always slippage. You want to see what slippage is like? Pay attention to what price does when there is a news announcement. All right, that's when things can be really crazy. You can set. I remember I set a stop loss once during a news announcement. I was in a position and I was like, right, I need to put a stop in place, because if I don't, then if it goes against me, my account's going to get taken out. And I set the stop loss, and because the news that came out wasn't what they had anticipated, all right, the actual price of direction completely tanked, and my stop was still there. They didn't trigger my stop, all right, and it just kept on going and going and going and going, and then it closed my trade. It hit the margin for the trade and completely wiped out my account. So I was like contacting them. I was like, look, man, I set the stop. Look, I even screenshot it. Why was this not closed? And they were like, slippage. There was an influx of orders and the system couldn't keep up with it because the news that came out wasn't anticipated. It was the biggest load of, and you know what I'm about to say next. All right. They knew that people were getting ready for this news announcement. They knew that there was a lot of liquidity about to come in based on this news, and it was the opposite direction. No one could close their trade. So slippage comes in many shapes and forms. So be aware. Stay away from news trades if you're trading in Forex. And in crypto, it's a little bit difficult because they declare the news either on Twitter or something happens and then price reflects on that straight away. So you've just got to proceed with caution. All right. I hope that answers that question. Here we go. Kushkara, how you doing, my friend? What are your thoughts on moon phases? There is a bullish moon tomorrow. Do you know what? I'm not going to disregard the moon phases. I don't really talk about them. All right. But this is a thing that Mike Dutch talks about. All right. He's dived into the moon phases and they do hold. It's weird. It's like you see the moon phases when you load the indicator because it's on TradingView. When you load it, okay, you can see how the phases reflect or determine what price is going to do next by principle. Okay. Now, we can't deny the moon phases because let's jump back 100 years ago, even more. When you got the pioneers of, the Gartley pattern, William J. Garrett, who come up with the idea of torque analysis. A lot of them based it, okay, on a lot of it was to do with cycles, seasonal cycles as such, a lot of geometry, which does bring in the idea of the moon phases, different times in the day, different times of the year. All right. And they all base their math on that principle. All right. So can I, should I disregard it? Well, it's not that I'm going to disregard it. I don't use it myself because I'm in a trade and I'm out of it sooner than later. I can't spend time watching the moon phases. I'm not in a trade long enough. Now, if I'm going to be holding trades over a long period of time, maybe I can use it as a confluence. But by your principle right there, my friend, there's a bullish moon tomorrow. If there's a bullish moon tomorrow, be careful. Because if everyone is using the moon phases and it's a bullish moon tomorrow, everyone's expecting price to rise. People are going to come into the market and start buying. We understand that that's when the market maker is able to sell because you can only buy when someone sells. All right, this is the problem that I have with all sorts of indicators out there. There are indicators that tell you when to buy and tell you when to sell. Okay, all that is to me is the market maker using these indicators and is aware of these indicators, and he can tell when people are coming in, for example, buying at the Fibonacci 61.8 or selling at the 61.8. When people are selling at the 61.8, the market maker knows that he can start buying from that point because that's where people are going short. So he can get the most amount of liquidity at that point in time on the Fibonacci retracement of 61.8 because people are following price to that point and then they're selling off when it hits that zone. This is what I don't like about the fibs because you're pretty much getting manipulated into believing that, yes, price does retrace back. And you know what? When you pull up the fibs, 9 times out of 10, you're going to see price from the high down to the low. You'll see it retrace. But you need to ask yourself why every time it retraces. Okay? I hope that answers your question, my brother. Wicked, wicked. HK, seems like you do like the market cipher. I've noticed you coming into the channel all the time. I don't condemn any other indicator out there. I'm proficient in the hybrid strategy. I know it inside out. I know it works. And there are many people that would advocate that it does. Some people don't get it. Some people advocate market cipher. Some people don't. This is the nature of life. Some people like Ferraris. Some people don't. You can't please everyone. And even if your system is great, if it doesn't work for someone, it doesn't work, bro. I've checked it out, G-Unit. I've checked it out. I'm compiling both your New York session PDF with your updated version of the PDF, G-Unit. So don't worry, I've got you on there, bro. Okay, then. Valentin, okay, what's the red candle, green candle formation? All right, quickly, red candle, green candle formation, okay? Red candle, green candle formation. Here is a failed red candle, green candle formation, all right? Now, the red candle, green candle implies that when they dump price, they are building their longs at the lowest possible point, and then the next candle being green is them releasing that liquidity and building shorts at the same time. Okay, but the problem is with this point right here is they created that formation at the highs. All right. Now, the reason they threw us off in that point is because they built more longs but realized the return as soon as possible because they favored lower prices. They were getting ready for a markdown phase. They marked price up higher and they planned on dropping it down. So this was another opportunity for them to build their longs at the lowest point, realize a return, close them and build shorts at the highest possible point again, because look, they entrapped enough liquidity at that point. Guys were going short. They had plenty of liquidity to take out. So when the guys go short at this point, that means there are liquidation points and stops all the way back up, which is what triggers the market maker to move price back up again and build more shorts at the highest possible point. That's why you see that whip and whack. Drop, up it goes, and then it slowly starts to descend. Do we understand that? Yeah? Now, a true red candle, green candle formation, if I can try and find one in the chart. Okay, here you go. Green candle, red candle formation. One right there. All right. So you've got the green vectors moving to the upside. They close very strongly at this point right here. And then the red vector, it doesn't start as a red vector, but they spike price higher, trap more liquidity, and then they reverse price. Whenever you see it happening at the highs, green candle, red candle formation, they're likely to bring it down lower. However, there are instances when we do see the green candle, red candle formation, and then they reverse price back up. You're waiting for the candle confirmation with regards to the red candle, green candle formation. All right? You wait for the confirmation candle. That one right there is the confirmation that they weren't going to go back up, because look at the wick itself on the next candle. Very, very small. All right, there was no intention to go further. They've trapped the liquidity. They are now taking out all the guys who went long and hitting their stops and their shorts. Hitting their stops and liquidation points, because they know that they've got them all set up here, and then they just mark price down lower. Just pay attention to any time you see a green candle, red candle play. Just look at how fast they move away from that point. All right. And then, of course, you've got market structure. All right. Look at where this pattern existed. It came when they marked price up higher. So at some point they were getting ready to drop. All right. So I hope that does help. Okay. See, nice one, bro. All right then, cool. So let's have a conversation, ladies and gentlemen. Okay. Right. What have we got here? Bitcoin. This is on the 50-minute time frame. I like to look at things in perspective of the hourly. Now, look, man, there is some very interesting behavior happening in and around this zone. The 200 EMA is doing a very good job at being held. The 200 EMA on the 1 hour is doing a very good job at holding. This is the 50 EMA on the 4-hour time frame. So we flip over. We are holding this 50 EMA. Now, what's important is when you see vector candles at the 50 EMA, all right, it's a good sign. But we need to wait for confirmation. We need to see that they are actually going to move higher, because they've done this for quite some time. Look, over the past few days, they've been holding the 50 EMA and they're not allowing price to break down lower. They're spiking lower because there are traders that are setting orders at the 50 EMA. All right. And they're fulfilling those orders. These are not rejection areas. OK, these are areas where traders go short. These are areas where traders go long. There are orders sat in this area. This is why we see wicks. OK, because the market maker sends price in that direction and pulls it straight back because he's obtaining the liquidity at that point. OK, now it's all down to what happens over the next 24 hours. In my opinion, based on what's been going on lately, what happens in the next 24 hours is going to be pretty important, because it's at make or break. All right. Tomorrow, everyone comes back to the market. We're starting a new week. Okay. We are now coming close towards the end of the month. All right. So we're at the 20th tomorrow. So they're going to start putting the gas on, because market makers have targets. Okay. We just need to see Bitcoin hold the 50 EMA on the basis that we expect them to move price higher. If they can't hold the 50 EMA, the 200 EMA will be the next point on the 4-hourly, which is the 50 EMA on the daily. All right? Can you see that? Now, they've only managed to come up to this previous area right here. They haven't taken 50% of that zone just yet. There is this massive gap right here, man. Huge gap. It's an algorithm. The market makers themselves don't actually work at the weekends. Sometimes they don't even work at all. It's the algorithm that's designed to fulfill orders, the algorithms that they get created. Okay? I mean, there are a lot of people that work as market makers. They're all liquidity providers. All right? Remember, you can only buy if someone sells. That sell order that is initiated, okay, is the market maker providing liquidity. All right? And when you lose money, it gets pumped through to the market maker. When you make money, you're taking the liquidity that the market maker provides for you. Okay? You think when you place an order on Binance, you think it's Binance giving you that money? Nah, it's not. Binance links you to the liquidity provider. The liquidity provider matches your order. At the same time, the liquidity provider charges Binance a fee for providing the liquidity. Binance then come back to you and say, can you please pay your limit order or your market order? Okay? Per trade. Yeah? Now, the algorithm creates and facilitates millions of trades per minute, even per second. So you can imagine the scale of how this machine works. It's always working. Yeah? Do you know what? A lot of people, right, let me explain to you guys. For anybody new that's passed into the channel, okay, this strategy doesn't really take into consideration your average indicator or your common indicator, all right? We can use those indicators as a confluence, but the bigger emphasis is on understanding cycles and levels, okay? It's understanding that if we are actually in the correct cycle on the daily time frame, for example, we're making the assumption here that this is a W formation, okay? Now, the W formation, price comes up here and stalls, all right? And we're pulling back and we're expecting this sort of behavior. Now, there is variation to levels and cycles, all right? We expect a cycle to be rise level 1, and then we've got a rise level 2. We're expecting another move up. Now, the cycles themselves are based on this pattern. This is what we're based... Oh, you know what? Forget that. Let me get rid of that. Let me start again. This is the cyclical pattern that we are talking about, ladies and gentlemen, for anybody new to the channel. All right? This is, by principle, a weekly cycle. All right? Now, in Forex, this is where it comes from. A weekly cycle would make this day, Monday, well, this day, Monday, Tuesday, this will be Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, and then Sunday again, all right? Because Forex only trades Sunday to Friday. There's nothing on Saturday, okay? Now, this channel started on applying this concept to crypto, all right? So we look for this cyclical pattern. Sometimes we only see a W formation, 3 levels up, M formation, and then it drops, forms a level 2, and then goes straight into a peak, and we don't get a level 3 drop. There's always going to be a variation on it. All right? This is what we're looking for. Now, when it comes to the chart itself, our goal is to try and work out where do we stand. So we go on the daily time frame, we drop down to the 4-hourly, and we're trying to work out what the market maker's doing in and around certain points in the chart. We factor in whole and half numbers. Why is it on this chart, to all the guys who've been with me for a while, why is it every time we see price come to a key point in the chart, for example, the whole and half numbers? So look at the vector candles that appear above and below the 50K point. Every vector candle you see breaks through or breaks out from the 50K zone. Can you see it? Green vector candle breaks through the 50 zone. That means they are building shorts at the highest possible point because there are a bag of orders at 50K. They do it again here. Break up again, green vector, blue vector, and then they go a little bit short. They're preparing the shorts. They move back up again, and then the red vector candles breaks through the 50K. Why is it breaking through only on the red vectors? Why is it the most notable points in the chart are when they break through the 50K zone or whole numbers and half numbers? Take the half numbers. So that will take us towards, for example, let's do 49,500. Whole and half numbers right there. Okay, so let me get that right there. Remember, this is on the 4-hour time frame, all right? So there's the 49,500. Where are the vector candles? One right there, one right there, one right there. And when you work down in the chart, you will naturally see the 49,500, 49,000, 48,500, 48,000. You're always going to see vector candles at those points because it's based on guys placing orders in and around that zone, okay? Then you've got the idea behind what the market maker is actually trying to get retail traders to do. So when I'm factoring in all of that information, I'm not using other indicators. Now, there probably is bearish divergence. There probably is bullish divergence. There's probably stochastics kicking off, RSIs and what have you. But the hybrid system itself is made up of 3 components: timing, repeatable patterns, and notable candlesticks. This is psychology of people's intention. This business model is designed for people to get trapped. Why is it when price moves higher and higher, it always pulls straight back? Why does it pull back sharply? Because market makers are building shorts at the highest possible point, because market makers don't go short when price is dropping. They go short as it's rising, because when you go short, you want to get your short at the highest price with anticipation for it to drop. The retail trader goes short when price is dropping. So he goes short to get price at a lower point. Well, wouldn't you want to get your short entered in at the highest point? Because you can guarantee you're going to see a good return when it drops. That's how the market maker does it. Because retail traders have been programmed to believe that when price rises, it means buyers are in control. But you can't be in control. Buyers can't be in control when price is rising, because you can't buy something if no one's there to sell it to you. And the market maker, as the liquidity provider, is selling. You can only buy when someone sells. Likewise, you can only sell when someone buys. Who is the only person in the industry that is able to fulfill orders like this? It's the market maker. People are running for cover. Liquidation points are being hit. Stops are being taken. People are selling, selling, selling. They can only sell if liquidity is being released from previous positions that have been in longs. And if people are making a run for cover and trying to get rid of their bag because they're scared of what's going on. They can only sell if someone buys, which explains why price came all the way down here and snaps all the way back up. Are we on the same wave? Are we all good on that? Ben, it is, you know what, Ben Roberts, don't be fooled. We're in a bear market. I hear what you're saying. But the thing is this. We have no bias to the direction. That's the whole point of this strategy. We don't care if it's a bearish market or a bullish market. Why? Because we're going to see a peak formation at the high and we're going to see a peak formation at the lows. We trade away from the peaks. You trade away from the points in the chart where they have come away from and they've acted as zones of support or accumulation. All right. So if I see this zone right here as accumulation, right, I'm only looking for longs because they've come away from that point. If price comes to the stage where it decides to break down lower, I would see this as a previous area of consolidation, accumulation, whatever you want to see it as. That means I'm going to be trading away from this point, so I'm going short. So whether it's a bearish market or a bullish market, I guarantee to you in a bearish market, they're going to retrace. I'm going to ride that retrace back up. That retrace could be from here. Look. If this by principle is in a bearish market, look at the retrace. If we're in a bearish market, look at the retrace. You're saying that you can't capitalize on a retrace. This is on the daily time frame on the principle that we're in a bearish market. People were calling for a bearish market a long time ago. All right. The moment it hit 64 and they were calling it's a bearish market, a bearish market. Look at the retrace right there on the bearish market. You're saying you can't make money from 49,000 all the way back up to 59. That's a 10K move on Bitcoin. Now look at the drop. Bearish-like behavior. Consolidation. retrace all the way back up. That is a reversal back up in a bearish market. You're saying you can't make money off that. Yeah? From the start of 20th of July, okay, all the way up till the 6th of September, all right? Nearly 3 months worth of trading to the upside. Where's the bearish market? Do you see what I mean about the bearish market and the bullish market? They are psychological impressions on people. People come to the chart and they say, nah, it's a bearish market. I'm going to wait until it goes back into a bullish market. I'm not going to buy. Then what does the market do? Starts to rise. People feel like they're missing out. Bang. Everyone starts buying. Price starts to drop. There you go. Trap. This is the business model, ladies and gentlemen. The business model is not designed to make it so that it's easy for you to try and determine whether it's a bullish market or a bearish market. They don't care if you have an opinion on Bitcoin. Plus, your opinion of Bitcoin is irrelevant because you're dealing with the realm of uncertainty. You have no idea where it's going next. I don't have no idea where Bitcoin's going next. No one does. And anyone that takes the claim of where they do think it's going to go, whatever indicator out there says so, they're lying to you. Why? Because you're dealing with uncertainty. At one moment, it can change. And how can I justify that? Come to this chart right here on the 1 hour time frame and explain to me how many indicators out there could have determined that price was going to collapse like that. How many indicators out there would have said so? Because at this point in the chart, it was El Salvador taking glory on Bitcoin. Everyone was pumping up Bitcoin, pumping it up. This looks like a nice move to the upside. Everything above the 50 EMA, everything above the 5 and the 13 EMA, everything was stacked to the upside. No one would have been able to prepare for a complete collapse in price. No one, which is why I say to you guys, all right, have no bias of direction. Get your money in good, make some money, and get out and reset. You're a trader. Your goal is to get in and out. It's not about how long you can hold a profitable trade for. Part of the business is trying to become profitable. And if you're profitable, why are you questioning your profit? You know? So that's my view on indicators. But it's the business model, guys. Excuse me. I had a little bit of a rant there. Tips on trading the 1 minute time frame. You have to be impulsive with your entries and you have to be impulsive with your exits. Okay? There's no two ways about it. All right? You have to be impulsive. Some people say being impulsive isn't right. You need to be patient. Yeah, but when it comes to pulling the trigger, you need to pull the trigger straight away. At the same time, you need to be out of the trade at the same time. Do you understand? You have to be quick. It's a quick draw. Scalping is about quick draw. You know? For any of my Call of Duty guys, it's sleight of hand. That's what it is. In, out. Change your weapon. Change your trade. Change your entry. Change your exit. That's it. In and out. That's the name of the game. Do you think the dip this weekend is due to the CME gap? CME gaps are just liquidity plays, man. Let me just open up this chart. Show you a gap. Okay, here's an example of a gap in price. This is on the 1 minute time frame. If you look very closely, all right, gaps themselves are exhaustion plays. Look, you see there's a gap right there, right? 9 times out of 10, it's getting filled. The one factor of it not being filled is they move away from it, but they always end up coming back to it. Okay? Now, swing trades. Okay, you want some advice on swing trades? You have to have resilience. Okay? If you're not prepared to sit through drawdowns, all right, then there's no point in being a swing trader. You know, swing traders, if you want to develop your, how can I say, your relationship with risk, all right, try swing trading, because swing trading truly tests your ability to manage risk, all right, because people get into swing trading, they set themselves an allocated amount of risk, but sometimes they don't stick to it. You know, so if you're allocating 100, say, for example, you allocate $100, right? You say, I'm going to lose $100 on this trade if it doesn't go in my direction and my stop loss will trigger a $100 loss. Well, if your trade is just bouncing up and down and you are now at the $50, you're minus $50, you kind of absorb that $50 and you're like, it's only $50. When it slowly starts to creep up, it goes 60, 70, 80, you start to absorb that loss in your mind. and you believe in your mind that price is going to continue back up, you're just sitting through a drawdown. So now that $100 is hit, you've removed your stop loss, and you're saying to yourself, well, I've got at least another 2,000-3,000 in my account. It's okay. I'll let this trade play out. I'll see how long I can go with it. It's going to go back up, man. It always goes back up in the end. And then that $100 loss ends up being a $400 loss, and you sat there scratching your head thinking, why didn't I close at a $100 loss, but now I'm happy to close at a $400 loss? Why weren't you happy to close at $100? Principally, it's the same thing. You're still at a loss. Close it and make it as cheap as you can. Swing traders, you build a lot of resilience with risk, but you have to understand not to get trapped and hold trades because you're a swing trader. Cut your loss, get out, and restart again. Makey, how you doing, man? If I can't find a good trade at the moment, I will chill. Of course you chill. Why would you enter into a marginal trade? Yeah? Why would you, it wouldn't make sense for you to just, if you can't see an entry, why would you try and force one? Which is something that people do struggle with. They try and force trades because they need to see action. You want to see action? Go to the bookies, man. Watch a boxing fight. Play a bit of Call of Duty. Do something if you want action. Right? Don't come to this game looking for action. Come because you want to get some money, get in, get out. All right? There can't be adrenaline rushes in this game. All right? Because those same adrenaline rushes are going to be the reason why you hold trades, because you're then feeding into the adrenaline of the trade going in your favor. And there are people that like to see drawdowns. There are people that see red, they kick off it, man. Like, wow, man, I'm down like 10 grand and I'm still got my position on because I've got liquidity to sit through a drawdown of 10 grand. Nah, bro. You're just passing the money from the trader who waits for the moment to get in to the guy who hasn't got the patience to wait either. So that's it. Ichimoku clouds are a good shout. And Ichimoku clouds themselves are really good to trade during the Asian session. Okay? They're really good for the Asian session. All right, then. I feel like I've gone off on a tangent, ladies and gentlemen. I need to have a conversation with you guys about what to expect next. So, where are we at? Dead town. That's where we at. There's nothing going on. All right? We're holding at moving averages. This is the 1 hour time frame. Okay? Whipping and whacking of price. At a moment's notice, they could just drop price down or they could just spike price back up. Okay? We've got to proceed with caution on that basis, ladies and gentlemen. Don't do anything. In my opinion, I wouldn't do anything until tomorrow. Let them show their hand. Asia opens up. Well, Asia is technically open. Well, Sydney's technically open right now. And that's not much of a big liquidity pool. But when Tokyo and Hong Kong turn up, that's when we're going to see the true intention. Over this weekend, they've been holding this zone for Bitcoin. All right? They've been containing it. What have they been doing? Let's dive into the candlesticks themselves over the weekend. And to help you understand earlier on what we were talking about, the concept behind the whole and the half numbers. Let's pull them out. Where we at? 47,500. There it is right there. Let me just get that changed up. Coordinates. 47,500. Check that. So what are they doing? Are they building longs or are they building shorts? Yeah? Look, 47,000. It's on the 5-minute time frame now. We're diving into the development of the candlesticks, okay? Because when you go into the higher time frames, you can see across the board what's going on. They're whipping the lows. Look, spiking the lows, working the highs, spiking the lows. What do you see more of? We see more hits to the high than we do to the low, but the bigger moves happen at the lows, which tells me that most of the support is coming from this area, but they're trying to grab traders to go short so that they can move price down lower to get longs filled up the lowest point with intention to move back up. That is one way to approach it. By principle, we could see that they may come back to recover these previous vector candles. Who knows? What will we need to see? Price will need to go above the 50 EMA, retrace continuation back up. This is what we'd need. Rise, retrace, back up. That's what we would need to see. Once they hit this previous pool of liquidity, we'll be at the pivot point. Then we're going to see another move. Is it going to be down or is it going to go back up? The nature of this game, ladies and gentlemen, never come into a channel or don't go anywhere to try and look for guarantees. You're not going to get them. In this channel, you will get perspective. I'll help you work your critical mind. I won't let you blindly go into a mind frame of thinking, yes, it has to go up or it has to go down. Nah. I'll tell you to weigh up your scenarios, work out your options. You're going to go and buy a car. You're not going to go and buy a car from the first garage you see. You're going to go to another guy who sells more cars or the same car. What price is he selling it at that point? What's the other guy going to do? When you get quotes, you're always looking for 3. Why do you look for 3? Why don't you just stick with 1? Because that would be a brash move. No different to your trading. Why would you go with what one person says? Collate the information. One guy says yes. One guy says it's going to go lower. One guy says it's going to range. One guy's saying it's going to go higher and continue higher. The other guy's saying it's going to go higher and drop. If you're having to look for someone else's opinion about something, it means you're still in the transition of trying to work out how to trade, which is fine. So then now you need to try and understand what strategy are you going to use. And if you are new, try the hybrid system. Each of the videos that I do helps you, explains to you what the hybrid system is about. Okay? Go back in the channel. Nearly over, I'd say, is it how many hours? Good 2,000-3,000 hours worth of streams of seeing the hybrid system in real time. There are people that have watched every single stream from January 21st this year all the way through. They've watched every single stream and they've seen the concepts playing out every single day. You know? Yeah, DeFi, that's very true. Very true. Last time longs were high, we saw what happened. Yeah. But you got also, is Japan in a bank holiday tomorrow? Give me a second. Is Japan in a bank holiday tomorrow? Wait there. Let me actually work this out. I think they are, you know. I think they are. I think they may be in a bank holiday. Very interesting if they are. Very interesting. Anyways, let's have a look at what else is happening across the board, ladies and gentlemen. I've been killing it with Bitcoin right now. Let's have a look at, well, let's see what's performing. FTM again. AVAX again. What's going on with these coins, man? Here we go. Look at that. Look at that. Beautiful. Beautiful price action. Trading above the 50 EMA, 5 and 13 EMA acting as support on the 15-minute. Drop onto the 1-hour time frame. Look at the beauty of the expansion of the moving averages. Okay? Does that mean it's going to continue higher? Who knows? Because you can see they started to come out of this zone right here. All right? What are they doing? Look back. Yeah? Why are they holding this point? Because you can see on the left of the chart, you can't really see any vector points in the zones right here. There's not that much happening here. All right? Now, that's not normally something we don't see, guys. To all my pattern watchers in here, right? There are hardly any vector candles here. Red ones, that is, where we would believe they're going long at lower prices. Are they preparing the shorts? Go on to a higher time frame. What can you see? Are we about to print what we would understand to be a massive M formation? Could that be a possibility? One more hit to the upside and then drop down to test the 50 EMA? Because there's a lot of liquidity down at 62 cents. Because that's when they started this move. And that was in August. 30th of August, sorry. So we've got to be careful. Could we be forming that basis on FTM? AVAX. There you go. 80 cents projection complete. 70 cents projection complete. Happy days. I remember talking about this. Let's get rid of that. Near enough. So, AVAX. Just looking back on the daily. Drop down to the 4-hourly. We can see here. Yeah, it's just holding their zones. But I'm seeing a lot of disparity between the alts and Bitcoin, Ethereum, and XRP. Bitcoin, Ethereum, XRP have gone nowhere and alts have made their move. Are we going to see a change now? Are we going to see that change? Yeah? Cake. What's Cake doing? Cake rising. Look at that. Cake is recovering its vector candle point. Happy days. Get rid of that. Failed W. Look, it's coming up. It's recovered more than 50%. So that's good news for Cake. Little mini W formation right there. There's a cross on the moving averages. People got squashed out on that cross, if you notice. The cross happens, drops. Yeah, and this is on the 4-hour time frame as well. Let's go and have a look at XRP. Again, XRP. Whole and half numbers. XRP has had a wild day today. Completely wild day. Unbelievable. Look at that. Spiking up and down. 5 and 13 EMA. Expanded. They're trying to hold this point in the chart. Look at all the longs they are building in this area, yet price is not dropping. Doesn't that grant a question? If you're selling off, why are you not dropping? There's something going off. Why is it all happening below what? What's it happening below? The key 1.1 zone. Vector candle 1.1. Vector candle 1.1. Vector zone 1.1. Okay? It's crazy, isn't it, how they work around those numbers? Because the market makers build their shorts above key notable areas and they build their longs below key notable areas. The reason they do it below and above is because when it's above, they contain price at the highest point, get the best fill for the shorts because people are setting limit orders at these numbers. So that when they break down through those numbers, the traders that get caught on the move up, their liquidity and their liquidation points and stops are set at these numbers. Also, traders set orders at these numbers. So it's a fair exchange, which is why price goes and breaks through those zones. Are you worried about tomorrow's S&P 500 recovery crash, the SEC meeting this Tuesday, the Chinese banks bankruptcy domino effect? Frankly, I wouldn't be surprised if price has already absorbed that. Yeah? Look at this. S&P 500 recovery crash. Look at gold. So gold last week, okay, has dropped 2 levels to the downside. We could be anticipating another move to the downside. When gold drops, it means investors are taking their money out of gold safe havens and moving it into riskier assets, such as the dollar. Where is it? Where's dollar yen? Gee, man, what's going on? Why am I not seeing my main thing? Where are you? No, it's not there. It's not there. Let me pull that up for you 1 second. Okay. So, where did it go? It's because it's closed, isn't it? I need to renew it. Okay, fair enough. Anyways, so what I'm saying about gold is this. In light of what you've just said about the S&P 500 and all this SEC meeting, they've been marking price down lower. Now, as a safe haven, you wouldn't want it to be too expensive for you to come to this to come to gold and, hedge off your exposure on your portfolio. You'd want it to be at least really cheap, which is why I'm a bit concerned about gold dropping. Because when gold drops aggressively, it always comes back up aggressively. Look at this. Aggressive move down, aggressive move back up. Okay? So I'm just a little bit cautious about that. All right? So by that principle, we could be on the basis that if they do drop gold a little bit more, then this information you're talking about, S&P 500, the SEC meeting, I mean, they could start the move back up for it. See, now gold has just opened. So it's really give or take. They know what they're going to talk about with the SEC. They know about Chinese banks bankruptcy. That's going to be effectively reflected in gold and dollar yen. So we just need to understand if dollar yen itself, if we go and look at it, if that information has been absorbed already, them moving price higher, then there's a good chance that once that actually gets spoken about, they're going to drop price down lower. Or have they marked up dollar yen to drop? Yeah, have they marked down gold to raise it up? That's what we're looking for. Ethereum. Where's Ethereum? Where are you, Ether? There you go. So, let me just get rid of these. So, look, Ethereum. Same behavior like Bitcoin, but Ethereum is holding the 200 EMA. Doing a very good job of doing so. And just remember, guys, we may think they're doing a good job of holding it. But in the next few hours, they could just completely drop price. You know? That's how it is. When will the Asian session release their shorts? Because the big dump was executed in the New York session and they got their longs filled at the lowest point so far. See, I wouldn't class the weekend as a place where you would factor in the Asian sessions. That's why I say don't trade the weekend. Only look for a few points in the chart which you can exploit. All right, but I would only apply the concepts of the Asian sessions and the US sessions during the week because they have levels and zones that they need to stick to. Yeah. Its XRP is 2017 peaks before Bitcoin dump. See, a lot of people are just coming up with lots of stuff about what they think these coins are going to do next based on what's happened previously. Forget it. We got different money coming into crypto now, guys. This ain't 2017 anymore. This is 2021. Right? You got SEC sniffing about all these exchanges. You know, money's coming in. They're getting all this regulation because they want to bring Wall Street into it. Different money sitting in crypto right now, ladies and gentlemen. Come away from what happened in 2017. Who cares? It's done. Back then, there was nothing compared to what it is now. You know? Sean, I wish Tina could debate and... Nah, man. End of the bull... Is that what he's saying? It's end of the bullish run. Listen, if BitBoy is saying it's the end of the bullish run, he has his understanding of that. You know, he believes that it's the end of the bullish run. I have no bias. I have no interest whether it's a bullish run or a bearish run. You're always going to get this in crypto and in trading full stop. If you say it's going to go up, the next guy's going to say it's going to go down. You can't change that. And if you're not happy because one guy says this and the other guy says that, well, at the end of the day, put your money where your mouth is. Go short, go long. You made any profit? What happens afterwards? Are you still in the same point? Is it a bullish market or a bearish market? See, if I go long at this point right here, price rises and I've made money on my trade and I've closed my trade, what happens to the bullish and the bearish market concept? It's irrelevant. It doesn't exist. It doesn't matter. Now, for the holder, it's a different story. But then again, for the holder, it shouldn't matter because the holder has a longer term view of cryptocurrency. He believes in the bigger picture. Whenever he sees price drop, it means it's cheaper. That's how a true holder should see it. A holder's goal is accumulation, nothing else. You're a holder, right? Don't be a holder with a trader's mindset. You can't do that. You will be subject to so many emotional trip-ups if you're a holder and you're coming into YouTube, Googling Bitcoin drops, Bitcoin this, Bitcoin that. Man, you're gonna lose your mind. If you want a more calming view about what cryptocurrency is doing, just go and buy the Financial Times. They can't put crazy headlines like that. They use words like Bitcoin roars or Bitcoin stalls or Bitcoin consolidates or something. You know, cryptocurrency on edge. You know, they make it a little bit more subtle, right? If they do talk about it, that is. So, once serious money gets affiliated with a broker and become broker introduce and make your money from referral. Nah. Tino, what fight would you win against? Right, what fight would I win against Crypto, BitBoy, man. Crypto, I'm running a mile, man. That guy's mad. I love him. He makes me laugh. You know, he does make me laugh. Crypto, I'll be running a mile away. That guy scares me. His thumbnail scares me. And you think I'm going to go face to face with my guy? No, thank you. You know? Okay, Angel. I've been curious. Would you speculate the blow off top of the cycle is the market maker losing never lose control? No. You can only buy if someone sells. Just remember, every single candlestick you see in this chart, a market maker has provided the liquidity for it to become a candlestick. There is no such thing as the market maker losing control. No such thing. This sort of point in the chart right here, market maker on a digital view, because back in the day, they used to do it on the phones. They probably called each other and said, dump it. Bang, off it goes. Literally like so. Get your orders ready, ladies and gentlemen. We are just about to drop everything on this coin. Get everybody hyped up. El Salvador, great. They're buying it. They're buying it. They're buying it. How many orders we got coming in? We got bags of orders. People are buying $30 worth of Bitcoin to support the idea of El Salvador turning it to legal tender. Fantastic, you people. You are brilliant people. Thank you so much. Where are we at with our shorts, ladies and gentlemen? We got $500 million stacked up here. We're actually getting another $500 million. We've got $1 billion worth of shorts stacked up here. What are we going to do? Dump it. Bang. At the best point in the chart, that's when they drop it. That's market maker behavior for you, ladies and gentlemen. That's how the business works. Forget your bull cycles. Forget your bearish cycles. It's irrelevant. You need to pay attention to the candlesticks. Okay? It's a psychology. All right? Just go back to this day in the week on the 5th of September before this move happened on Ethereum and Bitcoin, and just look at what news was being released about cryptocurrency at that point in time. And before you know it, shift out of the zone. Come on, guys. You know, you can't make a judgment on this business model because people think it's a bullish market or a bearish market. It's the biggest BS on earth. Bullish and bearish markets only really worked back in the day of the stock market, okay? When it was physically people buying and selling against each other, all right? That was true liquidity there, all right? But now it's digital. It's a digital game right now. There's liquidity coming from so many directions, ladies and gentlemen. We can't control it. You know? It's a scamology. You know? Tonight's stream's been a little bit different, just addressing your questions that you're asking, you know. Yeah, of course, Binance insider trading, largest exchange. I get that, you know, but it wouldn't be the first time that an exchange has been done for insider trading. It won't be the first time. It's a common thing. Look at the stock market, man. So many people have been done for insider trading. Okay? Years. It's been, you know, and what's really great is people coming into cryptocurrency, all right, talk about insider trading, SEC. Everyone's like, oh my God, the SEC is trying to investigate X, Y, and Z. Well, that's because you may not have been in the game of trading. You would know that the SEC is just that guy that's always sniffing around. Insider trading back 30, 40 years ago, man, they were doing it from then, you know? My experience is Forex, okay? So I've got the background in trading. 11 years I've been trading Forex, and this SEC game, you know, insider trading, it's just part of the game just to get someone paid under the belt. This is how they do it. Someone is getting paid off that investigation. You know, it's just a way to just grab money. And that's the sad truth about it. You know? So, are we all good? What would you buy right now in the stock market? Anything that's moving. Quiddity. By the way, BitBoy is saying bull over in next month or two. Pump to 100K, then bear market start. He didn't say it ended. Look, like, do you know what? I guess this is... Look, BitBoy Crypto is deemed as an authority in cryptocurrency. You know, when you type cryptocurrency, you're going to see BitBoy Crypto. There's no two ways about that. So if he says it's going to be in one direction or another direction, some people take that as testament, you know? But you've got to understand, from a trading perspective, all right, 100K, let me put it to you. 100K is quite far away, okay? It's a long journey, ladies and gentlemen. Look at how much that, look, I mean, I'm still scrolling, bro. That's where Bitcoin is at 100K, all right? Now, there's nothing to say that it can't go there. No one's saying it will never go there. Bitcoin was never going to go to $100. It was never going to go to 10K. It was never, never, never. We are now at 49 or 47,000. All right. That just proves if you've got intention and there is backing and money's coming in, whatever the economists say, whatever anyone says is irrelevant. If it's going to go to 100K, it will go to 100K. Why? Because the market has no bias. It's uncertain. No one knows where it's going to go next. All right? We just won't know, which is why people are searching for guarantees all the time. They're like, it has to go to 100K because back in 2017, it's irrelevant, 2017 or whatever. It doesn't matter. At this point in time, right now, ladies and gentlemen, Bitcoin is at 47,400. Okay, that is where it's at right now. That's what people are buying and selling at. That's what people are committing liquidity in the chart. They're not looking about 100K. They're not thinking about anything else. That's where they are right now in the chart. Okay, why are we talking about 100K? That's what I'm saying, figuratively speaking, like, why 100K? Why is that being discussed? You know? Yeah. Never. Let's look, man. It's everyone's entitled to their own. This is why when I come to the charts, right, the two things you need to understand with the way I trade and the way I read how price is behaving, I have to accept I don't know what's going to happen next. That way I'm not clouded by my judgment. If I believe price is going to go to 50K, I'm blind by bias. Okay, I only care about what, you know, price going up. That's all I care about. And that's not the name of the game. Okay, you can't have that bias in this game. You have to accept where you are right now, where you would like it to go. If you want it to go higher, you manage your trade, you manage your expectations, you place the trade, and you sit and see if it does play out. If it doesn't, you cut your losses. How much are you prepared to be wrong for? That's what the question is in trading. How much money do you want to commit in the chart and see the red before you decide that you are wrong? Our brains are wired in such a way that we need guarantees. We need safety options. That's what we need. And you can't get that in this game. Okay? Now, where do you think we go now, Tino? Ah, man. All right, let me just see. Everything starts with respect. What a cool name. Tino, can you please give us an example? When would be the next time you enter the market? What will you be looking for? Okay, so from a scalping perspective, okay, I can make many, many decisions on the chart. Okay, many decisions. Okay, already I've seen 1, 2, 3, 4, 5, 6, 7, 8, 9. There's about 9 scalp potential options that I could have taken from this move right here. Okay, just watching bounces. Do you know how difficult it is to make the assumption of where I'm going to go next? Okay, considering that there's, you know, 700 people in the stream, you know, you've got to be cautious about what you say. Yeah? Anyways, I've been going on and on for a solid hour. I need to give you guys the key levels for Bitcoin and Ethereum and an XRP. All right? These are the psychological levels, ladies and gentlemen, which we use every single Sunday. Get a pen and paper. Get these down. Where you at? Okay. Let's clear everything up. Right. So for Bitcoin, psychological levels for Bitcoin are, so the psychological levels are the first high and the first low that is set at the start of the week. So every start of a new trading week, the first high and the first low, okay, is effectively the market maker setting the spread. Okay? So the first thing for Bitcoin is psychological highs 48,367. Now, if you are new to the stream, okay, join the Discord and you can get these levels whenever you need them. All right. So you can work them out. You just type in the main trading chat, Psy levels, and they will pop up for you. So Bitcoin is 48,367. The psychological low is 47,578. Now, if you're on TradingView, all you need to do is just take those numbers, get a trend line, draw it across, and leave it there for the rest of the week. Okay? Leave it there until next Sunday, Saturday, Sunday, and you'll be able to then reset your psychological levels again. All right? So, that's Bitcoin for you. Thank you, Health Hustle, man. Thank you, bro. It's all good, man. XRP, psychological high and low. Here we go. XRP psychological high is 1.07. Right? 1.07. 28, you could include that as well, because this is the 4 decimal places. And you've got 1.0592 as the low. Okay, so the psychological low for XRP is 1.0592, and the psychological high is 1.0728. Ethereum, where are we at? Here we go. They are dumping nicely right now, but I'm not too concerned about it. Here we go. Psychological high for Ethereum is 3,440, right? 3,440 psychological high for Ethereum. And the psychological low is 3,370. Let's just actually go into the chart right now and work out what on earth is going on right here. Hold on, sit tight. All right, we're coming down to a low. We've got another 2 more minutes until a new 5-minute candle starts. Wait, we need to wait and see. Set 47,200 in sight. 1 more minute until the next candle forms. By principle, we should be seeing this candle reverse back up if they're working this zone. Don't want to see a continuation lower. Notice how they hit the pattern watchers. Notice how they hit the stopping volume candle right here. It's over. We're going to 0. Oh, man. Let's see. Let's witness what's going on. But to be honest with you, it's not gone anywhere that we haven't seen it go before. That's what's crazy. Look, it's just doing it. Look, it's just, look at that. Now, naturally, yeah, okay, it could dump. So what? You're traders. You have no interest whether it rises or it falls. You just need to work out the point you step in. If you've made money from the point you've stepped into, the next point you get out, happy days. Welcome to trading. All right? That's the nature of the game. If you believe that price is going to continue lower, you ride the move to the direction you believe it's going to continue through. You know? Got this wick right here. May actually happen. So, other than that, ladies and gentlemen, president of the internet, I've been a prop trader for 20 years. Crypto kiddies. We'll see. Bitcoin is done. We'll see. Bitcoin is done. Prop trader, man. Part of me, I've got to be careful what I say, but part of me agrees with you, bro. You know? The only way Bitcoin could be done is if people stop endorsing it. You know, when they stop endorsing it, that's the only way it's going to be done, right? But then you've got Ethereum. You've got so much behind the blockchain, you know. It's what are they going to back up? You know, back in 2017, no one was talking about crypto. Only those involved in it were holding it down. Now we've got so many companies involved with it, and it's just crazy. Anyone that wants the traders reality indicators, 2 ways you can get them. The description in the video itself, okay, gives you all the links to the Discord. You can download everything. It doesn't cost you a penny. Just get to the Discord and you'll be able to download everything that you need. You need MT4, the same platform right here in the description. You want the trading view indicators, go to the Discord. It's all in there for you. All right? Okay, then. All right, then. Guys, I'm going to call it a night, ladies and gentlemen. All right? Swing trade banana. Is there a price where you would buy it and hold just for... Yeah, I'm going to wait for Bitcoin to get to the point in the chart that I would never expect it to get to, okay? And wait for that to happen. That's what I'm going to do. Guys, listen, go have yourself a lovely evening. Thank you so much for tuning in. If you are new to the channel, be sure to like and subscribe. Mad love. Peace out. I'm out.